Tough times are pushing people in the UK to make hard decisions, and more families are taking out so-called payday loans with huge interest rates to put money in their pockets. RT's Sarah Firth looks at what's pushing people to turn to these companies.
Payday loan stalls have become a common sight in Britain's towns and cities. With the threat of a triple-dip recession hanging over them, more and more cash-strapped families are looking for a quick way to make ends meet.
With a loan from Wonga.com, you can borrow up to £1,000 for up to 31 days.
The North East in particular has seen a big increase recently in the number of payday loan shops that are popping up on the high streets. Now, here in this part of Sunderland, you can see there's not just one of these payday loan stores, but two, right next door to each other. This area is one of the poorest in the UK. And when you take a closer look at these stores' promises of instant cash, they come with sky-high interest rates. But working providing debt advice, Dave knows that what takes just moments to approve can lead to years of debt misery.
What happens is, if I haven't got the money at the end of the month to be able to repay it, then of course the interest rate will continue on. And then they'll go and get another payday loan to try and pay off the payday loan that they borrowed in the first place. So they'll maybe try Wonga first, go on to Quick Quid, go on to Payday UK, and it's just a never-ending cycle.
We went to meet one of the representatives of leading payday loan providers and asked them why the industry seems to be lending so irresponsibly.
It doesn't make any sense to lend to somebody who can't afford to pay you back. So the members I represent spend an awful lot of investment in the best technology to make the best assessment of somebody's affordability.
But these are areas of the United Kingdom that are some of the poorest communities, so that seems quite targeted. Why are they choosing these areas where you'd expect that people wouldn't be able to pay back that money?
What you're finding is these lenders are setting up on secondary high streets where the rates are lower. They're also setting up where there's a demand. The
government says it's conducting an extensive review of the payday lending sector, with a sight on tighter regulation. But in the meantime, and Dave has some clear advice for anyone thinking about taking out a payday loan.
No. As simple as that. No. Avoid them like the plague.
Sarah Firth, RT, reporting from Sunderland.